elevation.
Cool and Dre.
Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200 for
What's going on, guys? Welcome back to Goofy Investing, where we talk about investing in the stock market. This is the underground once again. Welcome to the channel. We're going to be talking about a small cap company that is, for all extensive purposes, a penny stock moving into a stock with probably going to get more recognition here. All right. Nlst Incorporated, ticker NLST. Trades on the over-the-counter market, $2.91, 930.82 million valuation. Short float stands here at around 11.32%. That will come in handy here as I do my analysis on this video to come. What are they? What do they do? Where are they headquartered? All right, so they are in the information technology, electronic manufacturing services space, and they pretty much create different designs for data center layout for actual microchip boards that go into the data centers and so forth. They specialize in high performance RAM and computing power and so forth. So that's what they do. Very small company, 69 employees, founded in the year 2000. Still fairly a young company for what it is. Headquartered in Irvine, California. Okay, is a United States company. And they're in the data center space. You can see them as a picks and shovels play for the main actual product, which is data center and compute power. All right. So they recently had earnings here May 12th, where they put up good beats on it on EPS and revenue, and as far as non-GAAP EPS actual. So there's that to consider. Decent track record on growth here. A lot of high growth here happening. Some cyclicality in the growth and spurts of capital coming in and so forth. Valuation sniff check. Let's take a look at it, and then we'll look at their profit margin. 3.81 million in debt, 17.01 million in cash. All right. They are doing sales of about a little over $250 million in sales. Consensus estimates got them growing on nearly 100% by the end of this year. So magnificent growth and so forth. So I guess bottom line up front, everything in the financials looks good. They're running the company great. They're running the company good. I wouldn't say great, but it's in the right direction. This is the profile for the actual financials and the quant are all good. All right. Cash burn, cash burn is going down. All right. They're nearing and flirting profitability. Annualized, they're burning, cash burn from net income purposes, 2023 was 60 million, just 2024, 53, 2025, 24. So they've pretty much cut cash burn in half. And free cash flows are positive. Okay, so that helps out as well with their net cash position and so forth. So they do have a lot of IP and tech properties, and we're going to look into the first, before we look into the actual environmental investment trading landscape for this particular company, which is part of an investment narrative happening that I assess with the company. Let's talk about their earnings. All right. So I like their earnings call. The CEO knows what they're doing. Management knows what they're doing. And a lot of commentary on lawsuits happening here. They have a lot of IP and tech patents that were filed with their products to be enabled into these data center companies. And essentially what's happening is a bunch of these giant companies, Samsung, Google, Micron, are infringing on their patents. All right. So the company is suing. Okay, they're suing all these companies Micron, they won 445 million against Micron. They got Samsung for 303 million, and so forth. So right now, what I'm going to do is I'm going to pull out my handy dandy calculator, and we're going to look at the market cap, and we're going to see what the market is pricing in. Okay, so we're going to do 445 million for the Micron judgment or awarding thereof, and then we're going to put 303 million, and I'll do a rounding error. Okay, so it's about 750 mil right there, and then I'm going to look at their sales, which is about 264. We'll just say 265. Okay, all right. So oops. So 265 plus 303 plus 445, and you get to about $1 billion, okay? And then now I'm going to look at the market cap. What do you know? Market cap's around 930 million. I'm going to go to their valuation, and their price to sales is at 3.25. Forward is 2.48. So with their sales growth, all right, due to their price to sales, cash burn, and let me look at their profit margin. All right, low gross profit margin. Okay, so but flirting with profitability. All right. So the way you got to think about this is if the profit margin is low but the TAM is high, that's okay for runway purposes. But price to sales multiple premium, this company is not going to be able to command price to sales multiple premium on that gross margin. So I'm assessing that the market, the price to sales multiple premium that they're getting right now, yes, a portion of it is growth rate, but a lot of it is pricing in judgments. Okay. So you have this company with IP and tech and execution, and they're executing well, and they're getting sales through data center build out, but then they're also going to get another mode of capital coming in via judgment. So I could view that more as, they're suing everybody, and they're going to create revenue based on judgments from these giants. So you have a two-pronged business model to where they can just keep suing everybody in perpetuity, and that will create a sales portion of royalties that'll come in of licensing infringement royalties. Okay, so that's how you got to look at this business and what they're doing. Okay, now just because the company has been awarded these patent infringement judgments, um, doesn't necessarily mean they're going to get all this money. What ends up happening is now they're going to go through the appellant process. So all of these lawyers of these big companies, Samsung, Micron, and so forth, they're going to stall and appeal. They're going to appeal the actual judgment into appellant courts, and then they're going to stall the payouts, and then they're going to reformat to structured payment plans. Okay, this isn't a thing where they go to the courthouse, they get the judgment, and then boom, the company just writes a check. That's not how it works, all right? This can be dragged out for years, all right? So there's that to consider, all right? Um, you know, so here's another thing with this David versus Goliath narrative play that's happening. All right? And if you're getting value out of the video, thumbs up. That's all I ask, all right? So, um this is how you got to view this. It's a David versus Goliath fight. In capitalism in America, I hate to say it, but the person with the most money wins. Okay? So we'll look at Micron stock, for example, on the 1 year, and then we'll look at Netlist on the 1 year. 300% for Netlist on gains, Micron 700% on gains. So that's, I hate to say it, but that's how America works. All right, whoever's got the most money wins. And Micron sales have have pretty much skyrocketed here in the, in the past few years. Okay, had a little downturn with cyclicality there, but they have mass scale. They got they got net cash balance sheet. They got a war chest to work with, and so forth. So this is what I'm thinking if I'm a Micron CFO. If I have a suit on and I'm a high upper echelon executive for Micron, maybe I'm the CFO. This is what I'm thinking about the whole situation. All right. And, sure, a lot of this may be, not morally or legally sound, but these companies still do this. They fight. So what's going to end up happening, or not, maybe, all right, this is what I would do if I'm CFO of Micron. All right, I'm going to look at their balance sheet. I'm going to look at Netlist's balance sheet. I'm going to look at their business, their cash burn. I'm going to look at everything. All right, and then I'm going to tell the other managers, give me 2 billion off the balance. Give me power over 2 billion off the balance sheet. Okay, and let me handle this. Hold my beer. So I'm going to increase short float. I'm going to short this up to 20-25%. I'm going to get this equity back down to $1.50, and then I'm going to buy. I'm going to cover my short when it comes down to $1.50, and then as I'm going to use the proceeds of that short and the actual war chest that I've been empowered with. I'm going to buy 15% of Micron or Netlist. All right, if I'm Micron CFO, and I'm just making an example, I'm going to short it down to 150. I'm going to cover the short. I'm going to turn around when the stock is down. I'm going to start averaging in, and I'm going to start buying 15% position in Netlist, because that's what that is, according to the format of their 10K shareholder structure. They may have, the management team of Netlist may have some ownership, and we'll look at insider ownership. They only own 3.28%. Okay, so this is form of hostile takeover type of territory. All right, um, and them on the over-the-counter market, they might not garner as many protections as a NASDAQ indice listing in the SEC and so forth. Okay, so if I'm CFO, I'm looking at all these different angles and how I'm going to maneuver in this. And then what I'm going to do at $1.50, after I've averaged a 15% stake from Micron, is I'm going to offer to buy this company out at $3 a share. Okay. And what's going to end up happening is they're going to be in this, and they could red pill. I could see Netlist doing some format of a red pill if they're able to do it on the over-the-counter market as a defensive measure, but it's not going to matter. Okay. And then the judgment and the proceeds are just going to come right back to it. And Micron, if I'm CFO, I'm seeing this, I'm like, okay, well, I'm going to own 15%. Um, on the actual portion of the judgment, I'm going to put that aside, and I'm going to accrue interest and delay legislation to accrue interest off that capital. And then I'm going to pull this maneuver, and then we're going to do a buyout. Okay. And then the management team of Netlist, I'm going to give them a parachute package to where they're kind of set for life. We'll give them a few $1,000,000 or whatever. Okay, and they'll be good to go. And that way, if I'm CFO, I'm thinking, oh, my company will own the IP and tech, and then we'll make Netlist, we'll rename it and make it a subdivision of Micron, and then we'll put that and then I'll hand that off to the investor relations, so they can, and the CEO, and they can put that on their slide deck for Micron or whatever. Okay, so that's essentially the possibility with this company, of what may happen. They got and it's not just Samsung and Micron, Google, they're fighting with Google and so forth. So there's that. All right, now let's talk about it as an investment, because, you know, member that requested this ticker asked me what I thought as a long-term investment. Me personally, I'm not interested in legislative plays that are in this format of investment. They could be value accretive, um, but and these judgments could get their cash, because that cash will come in and it'll be put on the balance sheet. And with their profit margins being this close to profitability, they're not going to need to issue out shares in a long time. So this dilution, if anything, they can buy back the stock or just keep the shares flat indefinitely until the company is in a position to create more injected value into the investment proposition. But the reason why I don't really like these plays is because, if I own a company, I honestly don't want to go through the stress of worrying if some bigger player is going to squash me like a bug when it comes to this type of stuff. All right. Some investors get a kick out of that and like that. Me, I like organic growth. I like, to be a long-term holder. I don't really like getting bought out, all right, against my will. And especially in hostile takeovers that get ugly, and all that happens is, maybe I just get a double when I could have invested in another stock where, I could have gotten, a 5x or a 10x in whatever few years or whatever time. Okay. So I think it's a good company. I just don't like the investment narrative thesis on what's happening with all the drama and what could happen and go wrong. Okay. And the profit margin, I don't like the setup with their profit margin and their price to sales multiple. Even though they'll get injections of one-time capital, liquid lump sums of liquidity coming in to cover them, and that would be great for the balance sheet and stockholder equity, but just not my cup of tea. All right. Could you get a double? Could this go inverse and execution can go wrong on a takeover? And I think that the management is thinking about this type of stuff. The leadership is thinking about this stuff. I think they're looking for an exit, but or exit possibilities of stuff that I've just talked about, and they understand how all this stuff works. But and that may be the long play, or that might be the actual what they're trying to accomplish on a forced takeover. But me personally, it's just not for me, but it could be for someone else. Not financial advice, just my different angles in. All right, so if you got value out of the video, check out my Patreon. I talk all about the different angles. I talk about value creation. Join a community of high-level, high-caliber growth investors. Get direct access to me. $15 a month, steal deal. I think it's worth way more. Even then, you could pay annually. Click this button and save 20%. Give it a shot. That's what I got for this actual stock analysis. I appreciate everybody's support. It means the world to me. Be on the lookout for more videos for the foreseeable years. I love y'all, and take it easy.
You take the blue pill. The story ends. You wake up in your bed and believe whatever you want to believe. You take the red pill. You stay in Wonderland. And I show you how deep the rabbit hole goes.
One thing to question your mind, it's another to question your eyes and ears.
Remember how you felt when you were alone? You were miserable. That's why we're here.
You're not gonna do it, are you? Change the world. You're afraid.